OK, well, let's bring Josh back. Josh Mahony from Scope Markets. Josh, it looks a bit on again, off again when it comes to this possible Fed rate cut. What's your take?
I mean, I guess that should be indicative of the indecision that's within the Fed at the moment. Certainly, the Fed is split, and we're in a position where they have to weigh up two sides of the dual mandate. One side of it is the jobs market, which of course has been deteriorating, and one side is inflation, which has been elevated and is well above the 2% target. So when you hear from one Fed member, they might say something very different from the next Fed member. This time around, we've been hearing from the Vice Chair Williams on the back end of last week. He's essentially said that he thinks it makes sense for them to cut in the near future. People have taken that as December, so now markets are pricing roughly a 75% chance that we see a cut by year end. Of course, we just saw the September jobs report as well. A beat on the headline number, a deterioration in terms of revision for the August number, a rise in terms of unemployment, and the expectation that we're probably going to see that headline number revised down anyway. Markets took that as a negative all in all, and so it's really fed into the idea that we will see a rate cut next time around.
Josh, with global markets all over the place, we've been talking a lot about an AI bubble, but I'm wondering, are we actually in an everything bubble?
I wouldn't say so. I mean, ultimately, you're looking at the US markets and they've been almost entirely driven by big tech. And so I wouldn't necessarily say that we've seen that big boom for the rest of the market. There is a perception that at some point over the next year, we're going to see the growth rate of those big tech companies come down meaningfully, but the rest of the market pick up. We certainly haven't necessarily seen that too much, but this earnings season has been pretty good across the board. So, of course, there's still question marks about whether this bubble is a bubble, which means it might pop, but we don't know when it's going to pop, and ultimately earnings have been very strong. So I would hope to think that soon we bottom out and potentially move into a more positive end of year.
It's also been a bit of a roller coaster for Bitcoin, Josh.
Yeah, I mean, it's a really interesting one because Bitcoin and crypto as a whole generally take their lead from risk attitudes set within your standard financial markets. There's a feeling at the moment because the crypto sphere has sort of permeated throughout the world to such an extent that the losses we're seeing at the moment are hindering sentiment within your major markets, most notably the likes of big tech. We've seen Bitcoin drop down to 80K. This is the point in the 4-year cycle which typically sees crypto collapse. That's why we're seeing jitters. And the big question mark is this time different because of the institutional involvement, or are we set for another 1-year decline that resets us for another big bull run for the likes of Bitcoin and the like?
Josh Mahony at Scope Markets. Always great to chat. Thank you.